I wonder what's doing with cardboard boxes in Vegas. Does that mean there's less homeless people living in them? Is that what's going on?
Mm. Yeah, I was going to say there would still be cardboard box demand in Vegas because people need somewhere to sleep if they get thrown out of their job as a blackjack dealer or whatever. But yeah, Vegas priced itself out of existence. It'll be interesting to see if it even exists 5 years from now in its current form.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. It's the day after voting day in November 5th, 2025. Well, John Rubino's with us. And John, if there's one theme, what's happening now is layoffs, 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 right?
Hey, Kerry. Yeah, that's kind of been a low-level thing for quite a while now. People have been talking about mass layoffs in tech and things like that, and now it's becoming a lot more broad-based, though. Starting with the cardboard box indicator. The guys who make cardboard boxes have a really good sense of which way the economy is going, because when people want a lot of boxes, that means they're selling a lot of stuff, and the opposite's happening now. The demand for cardboard boxes is tanking. And at the same time that's happening, a lot of other big companies are announcing massive layoffs. And remember, we're heading into the holidays right now. This is Christmas time coming up, when companies usually add staff. But they're laying off, or at best keeping their headcount stable, but a lot of them are just flat out laying off a lot of people, and you don't normally see that this time of year. So the question is the economy just rolling over? Like, are we finally going to get the recession that's been overdue for a long time now, or is it AI eating a lot of these jobs? So it doesn't matter whether it's the Christmas shopping season or not. People are being laid off by AIs that can do their job better than them, and it's probably a little bit of both, but we'll see in the coming year which one it is. But I think the recession that flows from this will happen sooner rather than later. We won't necessarily know why the recession is happening. We'll just know that companies are laying people off. And you've got a lot of other things going too, like the whole debt metric thing, where whatever kind of consumer debt you want to look at, it's at record highs, and the the stress metrics like defaults and 90 days late and things like that, they're all going up too. So we've got people being laid off, we've got debt spiking, and a lot of debt going bad at the same time. So that's the portrait of an economy that's rolling over into a recession. So, let's see if that turns out to be true in 2026. I think there's a decent chance that it does.
Yeah, and it's interesting you mentioned that. So another indicator generally of economic health is things like petroleum consumption. And in a rising economy, gasoline prices generally are going up. But here we see them sinking. And I think there's two reasons for this. If we buy into your recession premise that it's inevitable, that they haven't figured out how to eliminate the business cycle yet, and this time is always different. We know that, but basically, if we have demand going down because of layoffs, impending recession, and then there are now 6.2 million electric vehicles on the road. That's out of just under 100 million. So that's 6% less gas being consumed. And I presume that they're newer cars, the electrics. Therefore, newer cars are driven more generally than older cars, because in your older car mix, you've got like all the classics, everything else. Anyway, I'm meandering here, but the point is we got a double barrel recession coming. It's less petroleum consumption and less employment, which is driving that price of oil going down. It's at $60 a barrel. Trump heralds that as a great accomplishment, but it could be an indicator of something that he doesn't want to think about.
The other thing regarding oil and cars and things like that is that the car market is starting to roll over. CarMax, the big used car online dealer, just reported horrible numbers and their stock tanked. And there are all these videos online now where guys are walking around car dealerships and going, "Look to the horizon! It's Dodge pickup trucks. No, nobody's buying these things," stuff like that. And the consensus among those guys who are on the ground doing their own research is that the used car market is kind of imploding right now, and the new car market is just way overpriced. Cars just got extremely expensive because of all the bells and whistles. Like, for instance, I have a Toyota Tacoma pickup truck. And the newest version, the 2024s, they were completely redesigned and they got massive technology upgrades and everything. And they didn't sell well at first at all because nobody wanted to pay 20 extra $1,000 for a pickup truck. They knew how much a pickup truck was supposed to cost, and here the Tacomas are coming out $20,000 more or more. It made more than 20,000 in some model configurations. And it's like with houses, where houses are just unaffordable when you compare house prices to incomes. Same thing with cars. I mean, if you have to have an $1,100 car payment in order to get yourself into one of these new vehicles, most people are going to say, "Now that's what I pay on my house. I'm not going to pay that much on my car." So we've kind of reached the limit for that segment of the consumer market too. So that's another recession indicator. And we could go on and on about with recession indicators. Just fill up the show with those things because it does feel like we're getting there.
Yeah, it certainly does. And it's about time because the purpose of recessions get rid of excessive speculation, right? In the Austrian frame. That's why we have these things, because rates are too low, reckless investments. And what happens? The chickens come home to roost, and then we have a recession to eliminate all that excess speculation. One thing I want to point out, it's not on our list, but I think it's really important. Vegas is in the pits. No one's going to the place because it's gotten like $28 for a bottle of water. And they say, well, we're just catering to the exclusive crowd, the whales, the people that could drop six figures and up on a weekend and not think twice about it. I'm not buying it. I think it used to be a great deal. You could go on a great vacation in Vegas, spend hardly anything, and whatever you lost at the tables, and if you didn't play the tables, you came out ahead. Buffets. You could feed the whole clan. A family of five for like $50 and leave a generous tip and still have money left in your pocket. Now it's $100 a piece for a low-level buffet, and there's just no value left in that town. And as a result, that town's in a recession, and Vegas is always a leading indicator for recessions throughout the rest of the country because gambling is purely, discretionary. You don't have to gamble unless you're compulsive gambler, then you can't stop. But that's not the visitor count. That's 10-20% of the total people gambling are out of control, but the rest are just there to have fun. So that is a troubling statistic. And I wonder what's doing with cardboard boxes in Vegas. Does that mean there's less homeless people living in them? Is that what's going on?
Yeah, I was going to say there would still be cardboard box demand in Vegas because people need somewhere to sleep if they get thrown out of their job as a blackjack dealer or whatever. But Vegas priced itself out of existence. It'll be interesting to see if it even exists 5 years from now in its current form, because that's another thing where you see a lot of videos online of people walking around Vegas going, look, there's nobody on the street all the way to the horizon. There's not a single person here, and it's Saturday. Yeah. So, but that was just a stupid marketing mistake on Vegas's part, because some casinos can cater to whales, but the whole town can't do it. So and the thing about Vegas is that its water situation is really precarious. It's on the verge of running out of water because the lake that feeds it, the level of water is dropping to below the pipe, that
Yeah.
takes water out of
Yeah,
the lake.
the
And so,
Lake
so
Mead.
that's a yeah, Lake Mead, and that's a separate thing. If water has to be has to be what's that word where you just let some people have it and not other people?
Rationed.
Anyhow, rationed. If
Yeah.
water has to be rationed, yeah, then that means it's the
Not funny, but
farmers
it's funny.
versus the casinos. Yeah.
Well, the
Well,
casinos are going to win. You know that.
well, I actually did a Substack post on the whole water in the Southwest thing, and that was kind of the conclusion that the research came to, is that a lot of these places where the water is running out farm the desert.
Yeah.
And you should never be doing that in the first place. But now the water's running out. So the question is, do the cities get starved, or do the farmers just have to go into other kinds of farming? And the demographics, the political demographics, make it really clear that there are way more people in the cities. So they're going to vote for the farmers to lose their water rights, and keep the water flowing for cities. And it works. The math works. If you make the farmers stop farming, then there's plenty of water left over for the cities. Anyhow, this is a big digression, but it's an interesting part of the story
Well,
because
yeah, what you're describing is the movie Chinatown. Remember? Where they
I've never seen that movie.
It's one of the
I
greatest
know.
movies ever made because it's all about Mulholland and basically stealing all the water, doing a pipeline from the farmers in the north to feed growing Los Angeles. And
Ah,
if it hadn't been done that way, Los Angeles would be a fraction of itself because Los Angeles is desert. Oh my God. It's like
hmm.
you got to do that. You got to get on Netflix. You got to watch it immediately. Plus, the acting is, it's Jack Nicholson, right?
That
And
was his breakthrough role, I think. Yeah.
one of them, and yeah, like that is an absolute must for all of you out there. If you haven't watched Chinatown, because it's the water wars, but it's the water wars in the 21st century, and the farmers are going to lose just like they lost last time, because even though they have more political clout now, they don't have the clout that the cities have. But, I guess the concept of a city and why it originally came about and why it exists now, I think that's something that we really have to rethink, John, you know?
Yeah. There's an awful lot about this society that's been able to exist and to flourish because of easy money and really easily accessible natural resources. So if the water's running out and the money's running out, then things have to change in a big way. Um, James Howard Kunstler has
Sure.
written a lot of books about that. I think he has one called World Made by Hand, about how we're going to have to go back to making our own stuff because mass production is just not, and suburbia, et cetera, et cetera. Those things won't survive the next 20 years. That's probably overstating it, but conceptually, I think that makes a lot of sense. That just a lot of things that we think of as normal now are going to turn out to be based on unsustainable things, and they'll have to change. So, there's a million investment theses in that
Totally.
process. So we can still make money while it's happening, but for a lot of people, it's going to be really wrenching. A
It's
lot of
actually,
suburbanites in particular.
I think it's actually easier to make money now using AI, et cetera, than it's ever been before. I really think that in many ways. But you have to know how to use it, and you can't just ask it dumb questions and expect smart answers, right?
Well, Kerry, the easiest money in AI right now is shorting the whole industry. I'm talking Michael Burry's book here,
Yeah.
because he's a famous guy from the Big Short, the movie and the
Yes.
book. It was just announced that his hedge fund is majority short. In other words, most of its assets are in put options against one AI related company, Palantir. So he's betting basically the farm on the AI bubble bursting pretty soon. So and that kind of spooked in the last couple of days since that came out. The AI stocks have been really volatile. So we'll see what that means. Maybe that is the end of the bubble because it is a bubble, And the question is, how much money will it take flowing into that sector to keep it going from here? And with all the vendor financing they're already doing and stuff, where one of them gives $1 billion to another one who promises to buy $1 billion worth of the first one's stuff, that's kind of end of cycle activity, and it's happening big time in AI. So we'll see.
Totally.
I haven't figured out how I want to short that yet, but um, a lot of other people seem to have figured out how they want to do it.
Yeah, it's well, I don't mean to be laughing, but we've seen this movie before, and the movie
Yes, we
never
have.
changes, and it always ends the same way, right? Always, where there's
Well,
a few winners and a lot of losers.
but you want to avoid shorting the winners. That's the tricky thing. Like I shorted Tesla 3 or 4 times on its
I
way up,
remember.
and made money the first couple of times from the fluctuations where they went up and they corrected, and that was fine. But the last time around, I just had to bail with a
I have to
loss
close it.
because it didn't correct. Yeah, and since that time it's gone way up. And I actually looked at how to short Nvidia earlier in its process. And luckily, you couldn't use options to short it because the premiums on put options on Nvidia were just astronomical. There was no way to make that math work.
Yeah.
So luckily, I never did short that. But the Nasdaq right now just seems like a classic. It seems like a 1999 .com bubble kind of market where the leadership is so narrow. There's what now 7 companies
Yeah.
that
Yeah, the
is
fangs
that they yeah. Well, they
plus
keep coming up with new
Nvidia
names for them. Yeah,
plus
but
Tesla.
it's yeah. But so it's those companies supporting the entire global economy. And last time that happened, it was 1999 with the .coms. And this time, some of those companies have real sales and they're making real money, but they're also doing that vendor financing thing where they owe each other insane amounts of
Yeah,
money. And it only
Nvidia.
takes one, yeah. Well, it only takes one AI company, a builder of AIs, to go bankrupt and not pay Nvidia back, and then the whole show falls apart because all of a sudden everybody's watching this and going, "Oh, I see what they were doing. Yeah, all right, I'm out." And
I,
that could happen.
I've got the theme. What sets off the next recession depression is a huge AI company. Everything's going great, the money's pouring in, but then they get this huge electric bill that they can't afford.
Yeah.
So the power company shuts off the lights, and the data warehouse goes dark, and then they're out of business, and that sets off a whole chain reaction, kind of like what happened in Kuwait, I think in the early 90s, where they were all giving each other post-dated checks to buy stock, and then somebody actually tried to cash one of those checks that came due. And I think they've been on budget plan with the utilities, and eventually they'll come off that budget billing, that level billing, and then they'll get hit with the bill, and that'll be the end of the AI boom.
Yeah, yeah, that's a completely reasonable way for it to go. I mean, you look at OpenAI, for instance, they have obligations of hundreds of billions of dollars and revenue of tens of billions of dollars, not even earnings, just revenue. So their debt is 10 times their revenue, and it's not clear they're making any money. Oh no, they're not making money. They're actually losing money. So you got a lot of profiles like that in the AI space right now, any one of which can blow up. So we'll see. And on the other hand, it can keep going for 5 more years and bankrupt all the shorts before it finally blows up. So
Hey,
so don't try the Michael Burry strategy at home, folks. Okay, just because he did it doesn't mean he has lots of other money. He can survive that. But
yeah,
a little bit of shorting, nibbling at some put options on these things, not a bad idea at all.
yeah. Don't go selling the miners short though. Your silver and your gold miners. This little correction, algorithmically induced correction, it's not real. You just see premiums go up. Silver was at 54, now it's at 48, close to 48. They knocked it down. 47 looks like the floor now for silver, John.
Well, with precious metals, like with any bull market, you need to watch the underlying circumstances that made it a bull market in the first place. And in precious metals case, it's governments borrowing way too much money and interest costs on that debt going parabolic, and things like that. And as long as that's still happening, which it is still happening, nobody has any way out of the debt bubble that's going on right now. Then gold and silver, which are the kinds of money that you move into when people are moving out of the currencies that are being inflated away, they'll go up, or at least they'll be solid and stable. And then the mining stocks will do well too. So gold and silver physical, really high quality mining stocks, and the physical ETFs are all still great investments, even if they squiggle in the short run, even if they have a little more of a correction. The fiat currencies are still dying. And,
Yes.
a way to look at a potential high in the gold market is that if the dollar goes to zero, gold, when priced in dollars, goes to infinity. So
That's
I'm
your
not
upside.
saying, yeah, there's your upside, that infinity in the currency that you're using to make that measurement. So ride it for a while. This is going to be an epic bull market going forward, even starting from today's prices.
I've been buying up, and then we're going to have to cut it short, but I've been buying up 40% silver Kennedy half dollars. I was doing it 3, 4 months ago. I was buying them at 10% below melt value. Now there's no discount to melt on eBay. You're paying at melt or over. And that's considered the junkiest of the junk silver. And yet it is now not so much junk. So that's something you got to be aware of. Hey, government shutdown, we could talk about that for a while. Have you been affected by the government shutdown yet, John?
No, I have not, but it's gone on longer than any previous shutdown has gone on. So I assume those guys are feeling a lot of pressure from the people
Mhm.
who don't get their food stamps anymore, and I guess the military is still being paid. You can never not pay the military.
Yeah,
That's how revolutions happen, when you try to stiff the soldiers. So they're
you
getting
got it.
paid. So I'm not even sure who's not getting paid. Probably like the park rangers and
The
stuff like that,
traffic,
who
air
yeah.
traffic
Oh,
controllers,
you can't stiff air traffic controllers. Are they
TSA.
doing that? Oh, Jesus. Okay. Well, it's good. I haven't had to fly anywhere yet, so I'm still alive, which means I haven't been affected by that part of the shutdown. Anyhow, that I think they'll settle pretty soon.
Yeah, I think it's in
Because
the cards.
Trump has some people around him who would just love to let this thing go on forever, because it's their excuse for just firing everybody. And he's hearing that at meetings and stuff like that. But
Yeah,
I don't think he will consider that to be the highest probability bet. So they'll probably
no,
settle. And actually, the Democrats are the ones who are keeping the clean continuing resolution from being passed, because they see this as an advantage, that they can blame the guy in charge for the trouble that flows from that kind of an event. And they might be right. Trump's positive polling is going down, his
yeah,
favorability ratings and everything. So we'll see. But
yeah,
I think the pressure builds and they settle this pretty soon.
yeah. I tend to agree with you. And if they got to reduce the filibuster to 55 votes, they'll do it because this can't go on any longer. And it's just people are getting upset. Food stamps. I mean, this is always our nightmare, John. When you went to the supermarket, plugged in the EBT card, and nothing happened, and we're almost there. Well, it's going to be interesting to see. Make sure you go over to John's Substack. It's rubino.substack.com. Ours, we're strictly Substack now. Dump the website. It's khlfsn.substack.com. John, we'll see you in a couple of weeks. Be well.
Thanks, Gary. See you soon.